for the most part, it's pretty concentrated. I'm long-term bullish on Bitcoin still. Nothing's really changed with that thesis. The way that I'm interpreting this year is that the ETFs pulled forward a lot of excitement. People started to get really bullish in like February and March of this year. And we've seen kind of a slow draining of these kind of overinflated expectations since then. Um,
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. On September 7th, 2024, Bitcoin's network marked a significant achievement as its hash rate soared to an all-time high of 679 exahashes per second. This notable accomplishment highlights the network's exceptional robustness and adaptability, particularly in light of Bitcoin's price dipping below $55,000 during that period. A hash rate serves as a vital indicator of the overall computational power allocated to the validation and security of transactions within the network. Its peak value signifies not only the level of security, but also the dedication of participants in the Bitcoin ecosystem. Investment specialist Lyn Alden has offered critical analysis on the factors contributing to Bitcoin's network resilience, even in the face of recent price downturns. Alden identifies the decentralized nature of Bitcoin as a significant contributor to its resilience. In contrast to conventional financial systems governed by central authorities, Bitcoin functions on a decentralized ledger, which is upheld by an extensive network of autonomous nodes. The decentralization of the network significantly bolsters security and mitigates the risk of any single entity exerting excessive control, a factor that is essential for sustaining trust and stability within the system. Alden emphasizes the necessity of comprehending the control mechanisms governing the ledger to mitigate the risks associated with monetary devaluation. Unlike Bitcoin, which operates on a decentralized framework, fiat currencies are subject to substantial oversight and regulation by central banks and governmental entities, allowing them to exert considerable influence over their supply and management. This control may result in complications such as inflation or devaluation, especially in developing nations that are significantly dependent on physical currencies. The structure of Bitcoin effectively reduces these risks by preventing any individual entity from unilaterally influencing its supply or value. Alden observes that Bitcoin's capacity for rapid settlements has driven the emergence of numerous alternative cryptocurrencies. The introduction of these new digital assets seeks to mitigate the identified constraints within Bitcoin's architecture while improving transaction efficiency. Nonetheless, Alden highlights that in spite of the increasing number of alternatives, Bitcoin's market size is still comparatively minor when evaluated against the global fiat currency system. The fiat industry includes a wide array of currencies and financial systems worldwide, underscoring the disparity between Bitcoin's existing market presence and the larger financial environment. The record hash rate of Bitcoin, coupled with insights from Lyn Alden, highlights the network's robustness and the significance of its decentralized framework. Bitcoin's evolution and its capacity to drive innovations in the cryptocurrency sector are noteworthy. Its core attributes, decentralization and robust security, are crucial for maintaining its relevance and potential for future expansion. And lots of things Lyn Alden discusses, so please watch the video to end, and share this video, and subscribe our channel, Everyday Finance. Thanks.
so I'm still long-term bullish, and I wouldn't say I'm big on crypto in general. I tend to be pretty skeptical of the majority of the crypto space. For me, it's so far been really Bitcoin and stablecoins that I think are the most interesting, and then there's little pockets elsewhere that are kind of also kind of interesting, but for the most part, it's pretty concentrated. I'm long-term bullish on Bitcoin still. Nothing's really changed with that thesis. The way that I'm interpreting this year is that the ETFs pulled forward a lot of excitement. People started to get really bullish in like February and March of this year, and we've seen kind of a slow draining of these kind of overinflated expectations since then. The the big metrics that Bitcoin tends to track, and actually I've commissioned a report from an analyst I like, and I'm advising it that we're kind of quantifying this a little bit more. But Bitcoin tracks global liquidity better than any other major asset class, so better than stocks, better than gold, better than emerging markets, better than bonds. And there's different ways to measure global liquidity. In that report and in general, I define it as global broad money supply, but denominated in dollar equivalents. So you get both a credit expansion or credit contraction component, and then you get that strength of that dollar relative to the other major currencies. And basically, if that goes up or down in a given 12-month period, Bitcoin has the highest likelihood of other assets to do the same direction, which is over 80% in Bitcoin's case. So I put a lot of that focusing on global liquidity when I'm thinking about, say, a 2-year or 12-month Bitcoin price. I don't really try to judge like month by month or quarter by quarter Bitcoin price. For the political component, obviously most Bitcoin conferences are not that political. This particular one that happened in Nashville it's the biggest one in the world, and it's during American election season. So this one was very political. I guess the interesting thing about it is that most of the headlines were the Republicans there. So obviously Trump was there. There are a number of senators and representatives that were there. But I think what went under the radar is that there were some Democratic politicians there as well, like Ro Khanna, for example. And then he and over a dozen other congressmen wrote a letter to the DNC saying that they need to embrace that industry a little bit better than they have. So right now, if you look at, there's actually a study recently by Troy Cross, a professor, and another professor, I can't remember his name, but they found that they kind of looked at a sample, pretty big sample, it was a well-designed test as far as I could tell. And they wanted to see if there was difference between Bitcoin holders and the general public on a number of metrics, including politics. And they actually didn't find that much difference.
Really?
Yeah, the
Wow.
two biggest areas that stood out were Bitcoin holders skewed male and they skewed younger, but they didn't skew left or right, which was actually kind of surprising because when you look at politicians that embrace it, it certainly has skewed right.
On September 9th, 2024, Michael Saylor made an appearance on NBC's Squawk Box, reiterating his positive perspective on Bitcoin. In light of the recent fluctuations in Bitcoin's valuation, Saylor has maintained a confident outlook, emphasizing that MicroStrategy, under his leadership, has achieved significant success owing to its strategic emphasis on Bitcoin. Saylor assessed previous obstacles, notably the considerable pressure stemming from the collapse of Silvergate Bank. This event was initially perceived as a potential risk for MicroStrategy. However, Saylor disclosed that it ultimately resulted in substantial financial benefits for the company. He highlighted that, notwithstanding the volatility in Bitcoin's pricing, MicroStrategy's growth trajectory has outpaced that of all companies within the S&P index, emphasizing the effectiveness of their Bitcoin-focused approach. MicroStrategy's transformation into a Bitcoin-centric organization has been significant. Saylor outlined the company's evolution into a frontrunner in Bitcoin development, highlighting Bitcoin's distinctive advantages, including its liquidity and adaptability. Saylor asserts that these characteristics render Bitcoin an exceptionally efficient asset for navigating diverse market environments. Saylor's interview presented a striking projection, as he anticipates that Bitcoin may attain a value of $13 million per unit over the next 21 years. This forecast is consistent with his earlier robust support for Bitcoin's enduring worth. His optimism regarding Bitcoin's future aligns with a wider movement among advocates who consider it an essential asset with considerable growth prospects. Saylor's remarks underscore Bitcoin's robustness and its beneficial influence on MicroStrategy's financial outcomes. In light of the current market fluctuations, Saylor maintains a steadfast dedication to Bitcoin, perceiving it as a revolutionary asset that holds significant potential for exceptional future valuation. Let's get back to Lyn Alden interview.
It's funny. I think a lot of investors are kind of discounting the tails. Like they're assuming that the kind of polarizing forces of Congress will prevent some of their tail outcomes happening. So, for example, that we'll get more tariffs, but they won't be as huge as Trump, is kind of narrating that they will be. Um, because I think that obviously the issue with bigger tariffs, and many critics of the proposal have pointed this out, that a lot of those costs do get passed back on to American consumers in many cases. If those companies are not making the profit margins, they'll either stop selling to America or they just increase the prices, so we effectively pay for it one way or another. Um, and so that can be all around the margins inflationary. The Democratic propositions, on one hand, there are things that are more disinflationary, like the tax increases that were proposed, and some of those are pretty tail outcomes, like taxes on unrealized capital gains and things like that. I think again, the market's kind of like how they're assuming that Trump wouldn't get like enormous tariffs through, just kind of tariffs around the margins. I think they're assuming that Harris wouldn't get like an unrealized capital gains tax through, or even that other one, the more broad capital gains that is just an increase to the current capital gains. I think the market is kind of discounting that somewhat. I find both tails uh, not productive in general. That'd be my take. I did like a 50-year analysis on how economy performs, how markets perform, how inflation performs under Republican or Democratic presidents. Um, and it's more complicated than that because you'd have to incorporate the Senate and the House, and kind of the government's not just one entity. So it came down from officially measured like 9% to 3% fairly quickly, and then it got kind of stuck in that like 3+% corridor for quite a while, kind of sticky above target inflation. In recent period, it kind of came down to slightly below 3, but still above target, but obviously nowhere near kind of the headline issues that it was before. I think the Fed is correct in the sense that, like, I don't particularly endorse the idea that central banks even set interest rates, like that basically there's price controls of money. But to the extent that that's how they operate now, they do have these mandates between employment and inflation, and clearly the risks have moved from, when you have 9% inflation, that's kind of a four-alarm fire for inflation, and you got to get it back down. Now that inflation is in the ballpark of 3 or in the high twos, and unemployment is still low, but has increased from 3.4% to 4.2%, and historically, that tends to, when you get a move like that, it more often than not it keeps going. So if you're the Fed right now, you're saying, well, one is a little high but headed down, the other one's low but headed up. They're more shifting to the one heading up now. Also, if you look at the Fed's projections of where unemployment would be over the next couple of years, 4.2 was kind of their median, where they expected it to go. So if you start to get any sort of increase above that, they would grow more concerned. And the chairman's already said that they don't really want to see any more employment softening than they've already seen. We're outside of that really hot market where like you couldn't really hire people. Now it's kind of more balanced. And so I think from their standpoint, from their mandate that they follow, it makes sense for them to be more balanced between the two. There obviously is a risk we could go down further and kind of approach more recession territory. A theme that I keep pointing out is that it's when you go into recession, when you're already running 7% of GDP deficits, and deficits normally expand in a recession, that tends to be a different type of recession. I think that a lot of investors kind of fight the last battle. They think of 2020, they think of 2008. I think that a recession under these types of deficits would be a little bit more stagflationary, so maybe not as disinflationary as we think, but also maybe not as high unemployment as we think, because there's kind of a lot of pre-stimulus going into that recession. So I tend to kind of model it a little bit differently than average.
The cryptocurrency market capitalization has recently seen a decrease of $10 billion, resulting in a current valuation of $1.99 trillion. This figure is positioned just beneath the critical resistance level of $2.8 trillion, a benchmark that the market has approached on several occasions in the last month, surpassing it only twice. The significance of this resistance level is paramount for evaluating market strength and trajectory. Generally, the cryptocurrency markets tend to show lower trading volumes during weekends, which may result in potential decreases in market capitalization. Considering the prevailing market dynamics, there exists a potential risk that the overall market capitalization may decline to around $1.91 trillion if trading volumes experience a substantial drop in the forthcoming 2 days. The significance of this support level cannot be overstated. Should it fail to maintain its position, we could anticipate a more pronounced downturn in the market, with potential declines reaching $1.69 trillion. A decline of this magnitude would indicate a level not observed since August 5th, when the market experienced a substantial contraction, resulting in the loss of over $1 billion in value. In the Bitcoin market, recent trends indicate a balance between buying and selling pressures, pointing towards a period of consolidation. Throughout this time frame, Bitcoin's price has exhibited lateral movement, lacking a significant upward or downward trajectory. The observed pattern is evident in the relatively stable Relative Strength Index, RSI, on a one-day chart, suggesting an equilibrium between supply and demand. Yet it shows a deficiency in momentum for a significant directional shift. The current consolidation phase indicates that Bitcoin, along with the wider cryptocurrency market, may be on the verge of a significant movement contingent upon a shift in either buying or selling pressure. Full attention to trading volumes and support levels to assess possible future trends. Should the market not sustain its position above critical support levels, this may indicate potential further downturns. Conversely, if these levels are upheld, it could pave the way for renewed efforts to surpass resistance points. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.